So market spooked, oil prices showing extreme volatility. What lies ahead? Joining me now, Neelkanth Mishra, Chief Economist, Axis Bank, Head of Global Research at Axis Capital. Good to have you on the show, Neelkanth. We've had 24 hours of extreme volatility in crude prices because of the West Asia war. The market's totally spooked. The Sensex down by over 3%. How do you explain it? Is the oil economy deeply linked with stock markets in India and globally? And is it going to get worse before it gets better now?
No, I think the markets are finally waking up to the fact that this is a war which is not ending very quickly. Every dollar per barrel, if it lasts for one whole year, is a significant drag on the economy. Just oil, we import about 1.8 billion barrels equivalent every year. In addition to that, there is a significant amount of gas imports. So there could be, for every dollar increase, a $2.5 billion impact on the Indian economy. If given that oil prices are up about $40, that's nearly $100 billion of impact. So if this lasts for 1 year, there is clearly a concern. The good thing is that the oil forwards are not moving as much. So the oil markets expect that the war ends soon. For the markets as a whole, though, this can create new vulnerabilities. So there are many other stress points in global financial markets which can start breaking apart if oil stays at this level. So remember that India is not the only big economy which is going to get badly and negatively affected. There can be other stress points that start damaging it. So it's the uncertainty around which is actually spooking the market.
Because Neelkanth, a report by Nomura recently said India is among the 3 most vulnerable Asian economies to high oil prices in terms of import bill, current account balances, the other 2 being Thailand and South Korea. So clearly what's happening in West Asia is going to have a deep impact on the economy. You mentioned possibly the impact on GDP as well. So could you see a slowing down of the economy in general if this war gets prolonged?
If this war gets prolonged, see, and that's a big if, because as I said, if this is a war that lasts for a very long time, more importantly, the disruptions to oil supplies last a very long time. So if this lasts one whole year at current prices, we could see $100 billion impact on the terms of trade. So imagine if 2.5% of GDP is the extra money that we have to pay, there is a significant impact on growth. There will be a significant impact on inflation. I think the currency will need to adjust quite meaningfully. And all of these uncertainties can become quite worrying. But I must say that the likelihood of this lasting 1 year is very low. Because, and I would like to re-emphasize at this point that India is not the only economy which is negatively affected. China is also a big oil importer. The US has significant vulnerabilities in fuel prices at the pump, political vulnerabilities, even though they are net exporters. There is a lot of political sensitivity on high oil prices. And remember that this is a supply-driven problem. So all the states, so Bahrain, Iraq, Kuwait, Qatar, all of whom used to ship oil and gas through the Strait of Hormuz, are now not getting any revenue at all. And some of these are very frail states. So things are going to start becoming really hairy for some of these countries as well. And therefore, it is not in anyone's interest for this war or this uncertainty to last more for as long as 1 year.
Yeah, because when I look at government reports, they seem to suggest India currently maintains a combined energy buffer of over 250 million barrels of crude oil and refined petroleum products, equivalent to approximately 4,000 crore liters. It provides us a stockpile of about 7 to 8 weeks. So the worry, presumably from what you're saying, is if this war goes beyond April, May, if it heads into the summer and the early monsoon, that's when it becomes a real drag on the economy. Am I correct?
Correct. And in the interim, there will still be impact. So, for example, an auto producer, a car maker, the spray paint is actually running, those guns run with LNG. And LNG supplies, which are non-critical, meaning that household energy supplies are being sustained. So industrial energy supplies have been curtailed. So they'll have to find alternatives very quickly. So yeah, so there can be impact even shorter on a shorter time frame than that, but that should be temporary.
But we've already seen the impact on LPG, a rise in LPG price. So the other concern, of course, which affects the common man, is inflationary pressures. The Modi government has been rather successful in containing inflation over the last decade. The fear is, of course, that these are uncontrollables. If the oil supply gets hit, if the war is prolonged, then it has a cascading impact on inflation. Am I correct?
Correct. So the good thing is that almost 70% of the crude oil that is consumed in various forms by the Indian economy goes through this route of petrol, diesel, kerosene, LPG. And you would recall that for a long time, the oil prices had been falling down, but the fuel prices at the pump were not changing. So the intermediaries, which is the oil marketing companies, have over the past year and a half built significant amounts of buffer. So at least again, it's a 6 to 8 week period, even if oil prices stay at wherever they are, or maybe they go up slightly higher, their ability to cushion this, so the retail prices do not need to rise significantly. Once they start to rise, meaning that this lasts longer, as you said, goes into May, June, July, then I think their ability to hold back may be constrained. And therefore, that's when the inflationary pressures really start to build up. For the remaining 30%, and remember that there are other aspects here as well. So fertilizers are effectively a gas proxy. So fertilizer prices are going up significantly. And on top of that, but that also, as you know, is the farmers are buffered by higher subsidy burden. So they'll be supported by fiscal. And lastly, there will be chemicals and plastics, which are then directly flowing into customers. So again, with a lag, there could be some impact on inflation. But if this lasts longer than May, then I think the impact on inflation can be quite significant.
Just one final point. We are also seeing sustained FII selling, and the worry is the markets itself sending out the kind of signals. They're, of course, one part of it. Do you believe that the uncertainty, therefore, is what really we should be guarding against? The longer this continues, more uncertainty, and therefore all of it means that India is no longer insulated in any manner from what happens in West Asia.
So India's dependency on the world, so given that we net import about 50% of our dense energy in various forms, so oil, gas, metallurgical coal, edible oil, fertilizer, so all of this put together makes us significantly vulnerable to global energy price volatility. And that's exactly what we are seeing. In the first week after the war started, there was a general risk off because people don't know what to do. So they're cutting down risk, which is where EMs get sold off, and every stock market, every risk asset gets sold off. The weeks after that, the days after that, the markets become more discerning. So then they say, okay, so if oil is going to be higher, then let me reward the companies or the countries that are going to be selling oil, but whose supplies have not been disrupted. And let me stay away from markets like India, or Korea, which are net energy importers and therefore are likely to get hurt by this. But what our research shows, and my team has been showing this, that once the prices have stabilized, even if at a higher level, the stock markets on the whole, when the uncertainty slows down, is at this stage, there are some people saying oil will go to 150. Who knows? Now, once that starts to happen, other things start to break down, meaning that, so if say a Pakistan or some meaningful sized economy, which is very vulnerable, like Pakistan over the weekend had to raise prices by 25%. So if these economies start to get into trouble because they don't have any buffer, like we have, several weeks, if not months of buffer, even on our foreign exchange side. But there are economies which may not have that, and then defaults start happening. And then the financial markets go into second order, third order problems. So that uncertainty is what is, I think, punishing the markets right now. But our assessment is that if oil prices stabilize, albeit at a higher level for a couple of weeks, I don't think there'll be a sustained negative impact on the markets.
Okay, I'm going to leave it there, Neelkanth. Clearly worrying times, largely because of the uncertainty. No one knows really just how long the crisis in the Middle East will last. But thank you very much for sharing your wisdom with us here on the news today. Thanks.
Thank you.